Well, what's been the highlight over the last day or so has been an increase in interest rates. To give perspective, the 10-year US bond yield has gone up over 7 basis points, in fact 7 to 8 basis points over the last day or so. And that led US markets lower. Of course, bond markets are looking to price in a more aggressive policy by the Federal Reserve, but that's leaving markets low. And the Dow was down over 500 points, down over 1.5% in trade on Tuesday to start the week off. The S&P 500 was down 1.84%, and the Nasdaq fell over 2.5%. Talking a bit about earnings, Goldman Sachs came out with its earnings for the December quarter, and the stock fell 7% on an earnings miss. This was obviously led partly due to operating expenses surging over 20%. There has been wage inflation within the US system, and the Federal Reserve may be worried about that to ensure that does not get entrenched into the US system, which will lead to higher inflation. So a bit of the bond yield increase may also be led by this. Now, talking about the overall earnings, 33 companies have posted quarterly earnings in the US till date, with 70% of them beating analyst estimates. We will continue to monitor those numbers for you. Moving on to Europe. European stocks also retreated largely on the back of Fed policy, rising interest rates, and the like. The DAX was down over 1%. The CAC 40 and the Stock 600 were down around 9/10 to 1% between that range. And the FTSE 100 was down just below 0.2% in trade on Tuesday. When we look at Asia, how it started off, Asian markets have started the day mixed. They were lower in early trade today, but now they're sitting on a mixed bag. The Nikkei is down 1.8% as we speak. The ASX 200 is down 1/3%, and the Kospi is absolutely flat, but trading with a negative bias, down around 2 basis points only. The Shanghai and the Hang Seng, the Chinese twins, are looking higher. The Shanghai is up around 16 basis points, and the Hang Seng is up almost 0.75% in early trade as we speak. The other highlight that has been the case this week has been oil. Oil prices have been surging, and when we look at how oil is shaping up at the moment, oil is closing in on that $87 a barrel mark. It's up over 1.5% in early trade today. Brent is also now very close to that $89 a barrel mark. So we're looking at oil prices, looking at a steep climb in oil prices. In fact, they are almost at over an 8-year high now. And moving on to obviously bonds, we've seen that bond yields have been breaching the 1.81% till yesterday. It's now at 1.88% in early trade today, very close to that point. Now, bond yields have risen over 40 basis points, almost 40 basis points since the start of January. In fact, to be precise, 37 basis point rise in bond yields that we have seen. And the 10-year US Treasury yields had breached the 1.86% mark yesterday in trade itself. Lastly, looking at the dollar index. The dollar index also gained. It gained over 0.5% in trade yesterday. It's absolutely flat in trade today. It's at around the 95.75 mark. So that has, of course, affected the dollar index as well. Bond yields going up, the dollar index also gained as more dollars were purchased. Moving on to Bitcoin. Bitcoin also rose surprisingly. It's now at just above that US $42,000 mark as we speak. That's a roundup of how indices are shaping up early this Wednesday.